So welcome to the next in the series of webinars for the Smarter Society. We've got a really interesting webinar that's getting covered off. It's focusing on how SMEs deal with the cost of living crisis. And so we're going to be looking at some of the key areas. The agenda that we're focusing on is really looking about the cost of living and why it's happening, and the cost of living crisis. And it will also be looking at some of the impacts in terms of the pound, how we make a plan around that, and then also how you can impact some of your business costs, but how it will affect your customers as well. So just a couple of summary slides about why this is happening. So we've had the impact of the COVID crisis leading to a shortfall in labour. That's also impacted and has resulted in hourly rates and salaries increasing, which has subsequently then increased prices. So therefore, when you've got a higher wage bill, you then need to pass that on to your customers. They then ultimately need to see an increase in their hourly rates. So it's had a huge impact on inflation as a result of that. Add to that the impact on Brexit. That's where we've seen a reduction in the short-term labour pool, which has resulted then in a kind of acceleration of this impact of the shortfall in labour. And then alongside that, you have the Ukraine-Russia situation, which has led to shortages in grain and gas, which has led to huge increases in food prices, but probably more importantly in terms of utility prices. And I think that it's been well felt by almost everybody in this country, certainly anyone that pays a utility bill, in terms of the massive increases that we've seen on that. So the impacts have really just been felt. It's not just a UK issue. This has been felt across the globe, but it's particularly in your pockets as a business, and also more importantly in your customers' pockets. And in terms of what that means, I think that we've highlighted some of the areas. Increased costs, hourly rates need to go up, rents increase, ingredients and products are getting more expensive. Okay, and so also some companies, particularly those companies that are perhaps providing the services that we need, like particularly utilities, they are using this as an opportunity to increase their own margin. Not necessarily, but this is something that you need to think about in terms of, if there was a time where you needed to compare the costs that you were looking at, then this is absolutely now. In terms of how your customers are impacted, well, that's pretty simple, because you could be a consumer that's been impacted as well, and it's primarily around fuel and utility prices. But it's also on the inflation that you've seen in terms of the prices of your shopping, the prices of pretty much anything that you buy. And it's fair to say that if your customer base are people on lower wages, then they are disproportionately affected by this. So that what that means is that people on lower wages, the percentage of their wage that goes to providing for utilities, goes to providing for rents, goes to providing for shopping, is much higher than people on higher wages. So therefore, they are more impacted by it. In terms of what it means, in terms of some of the other areas that are causing some challenges, so rental increases, that is being caused by some changes in legislation around the housing market and around landlords, and so therefore it's now less attractive to be a landlord today as it was 2 years ago, and that is resulting in a net sell-off of buy-to-let properties at the moment. So we're seeing landlords are getting rid of their buy-to-let properties. Traditionally was a really big area for individuals to set up as part of their pension. That's now finished, and people are selling the properties, and that's causing a deficit or a reduction in the amount of housing stock that's available to be able to rent, and it's causing an increase in rental prices. We're seeing that rental prices are going up maybe 5–10%, and that's a real challenge for anyone that's renting. So you can see all of these issues are impacting down on the consumer and on you as business owners. So therefore, you need to think carefully about how you're going to manage it. Now, what we want to finally talk about is that we've just received an update from the new Chancellor, Kwasi Kwarteng, and what's happened here is that there has been a mini budget that was released last week. And the mini budget has been received in terms of by the market with a bit of concern, actually. And what's happened is that the impact of that has caused the pound value against the dollar to reduce down significantly. There have been a number of challenges from different parts of the financial world to really understand how the UK plans to develop itself going forward. Just to think about this and how it impacts us, it's really just another indicator of the concern that's happening here and what we're expecting to see over the next kind of 2 years or so, and so therefore this is just highlighting just how serious this issue is, and some of the changes that have happened were a little bit unexpected. So as a business owner, what do you need to do? Well, the first thing that you need to do is you need to recognize that you cannot put your head in the sand. Okay, it is absolutely not acceptable to be in that situation, because this issue is here, this issue is happening, okay, and you need to react. So the first thing that you need to do is to understand how this crisis is impacting your business. So some of the things that I've talked about in terms of understanding why this is happening, you need to be thinking about how that is impacting you and how that's going to be impacting your consumer. And we're going to look at how the costs are affected, what sort of costs, and then what the impact to consumer spending patterns, and thinking particularly about your customer as well. So we'll try to use some examples with that. Costs are probably the easiest thing to do first, so we can work out what's actually happening with costs and understand how you can impact your costs. So the first thing to do is to go to your bank statements and to look at the costs that you're spending each month and understand what those costs is happening to them. Costs are broken down into two types of costs. So one of them is fixed costs and the other one is variable costs. And we can take a little look as to what has happened to those costs over what's happened to them over the last 12 months or so. Number one, utilities. So we've put in there just some anticipated figures. So these are not necessarily relevant, but it just gives a flavour of the impact that the cost increases can have to a business of a certain size. So utilities. So the cost per month, we've put in a cost per month of £2,000. So bills in the last 12 months have gone up by between 300 and 1,000%. So that is a massive increase. Now, there has been a release of details by the new government to look at how they are going to support and manage businesses and how they're going to support businesses with regards to the utility bills. That is great news, and that is something that we will be sending out details of as soon as that comes out in terms of how you can engage with that. But the reality is that is going to be, at the moment, a fairly short-term support package. So it's expected to be 6 months. As a consumer, it's going to be 2 years. And what that's going to do is that's going to cap the cost of the bill that you pay. A cap is still higher than the costs that we've been paying over the last year. So there is still going to be an increase in that, and that's going to have an impact on your budgets. But that's the sort of increase. As a business owner, you need to be considering the fact that after the 6 month support package is finished, there may be another support package, but you need to consider the impact that if it happens if there is no further support package. Then let's look at staff, and staff is generally your largest cost. Bills will have gone up by around 10 to 20%. So if you've seen increases in either new staff coming in, or if you've increased the hourly rate of your existing staff, then that is the impact that you've seen. Rent is a really interesting one, because rent generally is based around a contract, and we'll talk about how you would negotiate your rental. But rents have seen a solid increase. over the last year. High street rents actually have not been so aggressive because the high street is suffering generally. So it depends a bit on the area, but that's it. But you need to assume that with inflation running at around 10%, that you should assume that your cost base is going to go up by at least that across all areas. Okay. Rates is one area. So this is effectively your rates, your business rates, which is paid for and paid to your local council, but it's not actually money that goes to your local council. It goes into central government, and it's set by central government. So the rates, we're not sure about what will happen with the increase or any support packages around that. But other costs like insurance and other services, then you can see that they've gone up by. In terms of what your bills will have gone up by overall, then because utilities and staff have such a high percentage of the total cost in most businesses, you can see that there has been a big increase in the total cost. It is really important that you understand exactly what those changes are, and then you can then go about improving them or working on them rather. So you've got your fixed costs, you've got your variable costs. Your fixed costs, basically you will pay that regardless of how many customers. So if you only have one customer, you will pay all of those fixed costs. The variable costs are all about the costs that you pay for each customer that you sell. So for example, a food business, consider the cost per meal, which is based on ingredients and what sort of increases that there will be. Ingredient prices have gone up in line with inflation, so this is going to be the opportunity for you to be thinking about that. Okay, so looking at product sale businesses, consider what the average basket cost per customer is, and then look at how your costs have increased. But in general, you'll be speaking to your suppliers. I would be very surprised if any supplier isn't actually saying, look, I need to have a cost increase. So once you've done all of this, then you're starting to understand what's happening in terms of the cost increases. If you're actually planning to be proactive, you can also start to think about what the subsequent cost increases will be next year and the year after, and you can make you can set an assumed inflation. So you can assume that your costs are going to go up 10% this year. Next year you should assume the same. So there is going to be these cost increases. This is then going to allow you to have the starting blocks to then start to build a plan of action. And once you've built that plan of action, you will then at least have a clear view as to what the cost increases are going to be, what you're going to have to do in terms of passing on that to your customers, and then how you take any action. If you don't do this, then it's really difficult to understand where to start. Okay, and it's really difficult to understand not just where to start, but also if you're negotiating prices with businesses, with your suppliers, you need to understand what point you want to try and negotiate with them. Whereabouts are you? Whereabouts? What are the key prices that you want to negotiate? What are your suppliers charging you? What is the competition offering you? These sorts of things. When you are reducing costs, knowledge is power here, and it's really important to do this. And we can see actually that with the cost increases, this is going to have a material impact on your business. So it's well worth you thinking about doing it. Managing costs is basically a good business practice, and it's generally, if you think about the big businesses, they are working every day to look at their costs. They will generally have a department that will look at this called a procurement department, but as SMEs, you're the business owner, you're the business manager, so you're going to be looking after that. But you can typically remove 10 to 15% of your current cost base, excluding utilities, if you haven't gone through a recent cost saving activity. Generally, if you want to do this properly, get your team together and help you to generate ideas. Okay, so one of the examples of this, one of our clients got their team together and they went through some ideas about how to save money, and they saved around £1,500 per month, not just on negotiating costs of ingredients, but also things like wastage. So wasting products is basically throwing money out the back door. So if you can improve the amount of wastage, reduce the amount of wastage, then you can actually save money through that. And also being smarter through the way that they scheduled the staff in there. So actually, you didn't need to have as many staff on site. Now that seems like a very strange idea that a team member would come up with. But let's remember that staff now are really keen to make sure that businesses are sustainable, because if they lose their job, it may be difficult to find another job elsewhere. And that's a really important part of this. So make sure that you get your staff involved with this. Cost reductions may actually still not mitigate pricing. So you may not actually see those price changes in there. And so it's something that you need to just accept, but it might mitigate the prices. So that's an important part of the of that, and it might make sure that you get as minimal price reduction as possible. Okay, so how do you review each of these cost items? Well, that's a really important part of it, and it's understanding what you can do. Okay, so the thing to be thinking about is which cost item to target first, and it's important to understand about whether you can impact that cost or not. Because if you can't impact it, then there's no point spending any time about it. So certainly, it's very easy as a business owner to complain about certain costs. But where we're talking about our ability to impact it, so can I impact rates, the rates that are charged? Well, no, they are charged by the government. So they're charged by the central government, not the local government. It's the local government that collects them. You can't impact them. So therefore, they are what they are, and you just need to accept that. Utilities and rent are areas that you might be able to impact, and it's going to depend a little bit on your current contract. And also your ability to negotiate with the particular suppliers that you've got. Okay, but if you're talking about the costs associated with staff, can you impact the staff cost? Yes, you can, absolutely, and we'll go through how you can do that. Products, can you impact that? Transport services, absolutely, you can impact all of those cost items. So if you're considering the potential to impact, then it's all about looking at whether you can impact them, and then looking at starting with the highest value. So even when you can't actually negotiate a particular cost item, there's still opportunity to investigate potential support that you may be able to get as a result of that. So probably the most challenging and the most worrying cost increases that have happened have been the ones associated with utilities. And so this is probably the most important area to be focusing on. What we've seen is we've seen energy prices going up significantly. So therefore, what we need to be looking at is to consider price comparison services or energy brokers to look at what you're spending. So there are options to be able to combine bills if you haven't done that already, and looking at suppliers that will provide both services can also have a cost benefit to that. Ultimately, your prices are going to be going up for utilities, and that's based on costs that the government can't control. It's based on costs that you can't control. It's actually, it's based on this these energy increases associated with the gas price. But you can also focus an impact. So what you can impact is actually your usage. So the biggest energy consumption items in a business will include fridges, air conditioning, technology, lighting, cooking facilities. So you can consider whether investment into more effective technology or solar will have a benefit. Now, this benefit is unlikely to be felt in the short term. But as businesses, if you are considering your business to be a long-term business, then investment in a new fridge or new air conditioning, you could see a reduction in the power usage, which will potentially pay off over 8 to 10 years. And this is something that I think people that have invested in solar back in the last 10 years. When people were buying solar, they were quoted that the solar panels would take 12 to 15 years to pay off. With the increase in the electricity price that has gone up, those returns, the return windows on the solar panels is probably closer to 5 years now. So it's now much more beneficial to consider that. Recognizing that you have to have, you actually have to have money to invest. There are areas, and sometimes there are local grant schemes that are run that may cover green technology, and that will depend on the area that you're based in. So the next big cost will be around your rental, and working with your landlord can seem like a no-win situation. And actually, it can depend on how the relationship with your landlord, but also the contract that you're in with the landlord, and that's called a lease. So what you want to be thinking about working with your landlord is that over 20% of the UK's high street properties are vacant at the moment, and it is likely that trend will continue to increase. So finding good quality tenants that pay is a real challenge for landlords, and this can work in your favour if you're a good payer and you've got a good relationship with your landlord. What we recommend here is to arrange a face-to-face discussion with the landlord and look and discuss with the landlord about some of the financial challenges. Now, remember, the landlord's going to also have financial challenges in place, but what they are not going to want is they are not going to want you getting to a situation where you have to leave the property at short term and they are left in a situation where they have no tenant and they also have potential gap in rent. So it's really important to explain to the landlord that actually they are investing in the long term just as much as you're doing that. Okay, it's one of those areas which can be quite emotive, and it's an area which I think that you need to think carefully about. But if you've prepared your discussion with them, then at least you can start to think to set it out so that you can discuss with them now, but you can then discuss with them again in 3 months, in 6 months, and give them the same message. And if you give them the same message multiple times, then perhaps there's an opportunity that they might actually think differently about that. Okay, so staffing, this is a really emotive area. It needs to be managed carefully, okay? You need to consider the long term, because having great staff is a real asset to a business, okay? If you need to find staff again, then it may be at a higher cost, but you're also going to need to train them. You're going to need to make sure that they are the right people for your business. And you're going to need to make sure that they're going to buy into the way that you want to deliver business to your customers. But what you can do is you can think about this collaboratively, and you can look at rotas, and you can look at how staff hours can be changed or reduced. Doing this in conjunction with staff can be a mixed bag. So sometimes that works and sometimes it doesn't. But I think if you explain to the staff about the situation, and you're very careful with that, and you explain to the staff that this is a challenging time, then at least that they have more chance of understanding the situation that you're in. Thinking about customers and customer self-service. So let's look at how some of the big supermarkets have dealt with managing staff. Well, customer self-service. So go into any Sainsbury's or Tesco's or Morrison's, and you'll be faced with a bank of self-service screens. So think about how you can introduce some form of self-service to your business that allows you to potentially reduce down the amount of staff that you're using. Consider each of the areas that your staff are working in and where you could reduce down, and consider about the sort of smart scheduling, and have an open discussion with the staff about it, because again, they will be invested in making sure that your business is sustainable so that you can therefore continue. Negotiating your other costs. Well, accountants, transport, finance, equipment and marketing, there are lots of other costs out there. Have a plan in place and a rate that you want to achieve. Consider extending the lease to achieve a cost reduction, and then look at other businesses, look at other areas, look at other opportunities, and be ready to compare that. You need to think carefully about potentially moving your business to other suppliers, because this is the time where you're going to need to negotiate carefully. If you want to stay with your current supplier and they're refusing to give you a cost reduction, then perhaps negotiating a longer term contract in place with them might be a way of giving them some certainty, and therefore they're able to either give you a cost reduction or mitigate some of the cost increases that they're proposing. So think carefully about that. It's not just about changing every single supplier. It might be about giving more commitment to an existing supplier, and then they're able to be more flexible with you about that. Products and ingredients, again, also that we're going to see some price increases on that. And so therefore you can work with your suppliers, and good suppliers can help you look at alternative options. So considering a new supplier is one option, but then thinking about how you can either reduce your price or mitigate cost increases is another way of working. And actually working collaboratively with suppliers is a really good way of doing that. Bulk buying products that don't degrade is an opportunity to reduce costs and get your products at a lower item, a lower unit cost. Other options would be to look at whether seconds, such as wonky veg or products close to their sell-by date, can be used as suitable alternatives. Now, what we're saying here is not necessarily that you should go for a lower quality product, but it's all about thinking about whether the options that are out there may be suitable to you. So, for example, with wonky veg is generally considered seconds or thirds, and it's usually because it's usually a bit smaller. So by having smaller veg, it's usually cheaper. But if you are working in a food service business, then that generally means that there will be a slightly higher preparation cost increase on the smaller veg. And so there is a trade-off between that, and that's something that you need to consider. Buying seconds in as products can provide some really great offers for businesses to draw customers in. Let's remember, this is a really challenging time for the customers as well as for you. So if you can offer really good deals on products that are overstocks or products that are seconds, and you can offer that to customers, that's a great way of offering a value-based offering that will be attractive to customers and will bring them into your store. So also think potentially about that. Pricing is key, and it's not a situation where if cost increase, there is going to be a point at which you must increase your pricing. You must be profitable as a business. If you are not profitable, then your business isn't a business, it's a hobby in losing money. So you have to really consider that. But you've got to balance that against the fact that consumers will have less money as a result of the household crisis. 50% of the households in the UK will be suffering fuel poverty at the moment, or as a result of this. And since the COVID crisis, low levels of unemployment, and businesses have struggled to find workers. So you've got to be really mindful that in terms of the balance between increasing your pricing and so forth. What I think you need to be thinking about here is you need to be thinking about the consumer's thought process as a result of this. And the consumer's thought process is such that they have less money in their pocket. When they have less money in their pocket, or they think that the economy potentially is not going to do well for the next year or two, that hits what's called consumer confidence. And we all know what that means is that we look at it, and if the economy is booming, we feel confident and we think, yeah, we're willing to invest our money. That might be in a new haircut, that might be in a new car, that might be in a new phone. As suddenly when this confidence is rocked and we think, wow, potentially we could be made redundant, or we could see a reduction in our profit as a business owner, our confidence to spend money on new things suddenly reduces. So therefore, that's going to impact consumers making their decision. So shall I get a haircut? Is the decision there? Well, actually, if suddenly there's been there's this reduction in the money that's coming into a household, then it is likely that your customers will start to reduce down the amount of times that they go for these sorts of costs. A nice haircut, a massage, buying a new product, they are costs that you don't need to incur. Whereas costs associated with utilities, mortgage, rent, stuff like that, they are absolutely costs that you you need to incur, and people will want to make sure that they're covered. What you can do as a business is recognize this in what you are marketing. Focus on deals that the consumer will respond to. Okay, so think about those value-based deals. Think about what's going to resonate with the customer, and it's going to be focused around price. So if you can find products that have a really value-based offering, you can bring people into your store, and then you can link that to the store service and have a plan on how to upsell every customer. Even if it's a couple of pounds, this is a helpful way of increasing your profit. We've got a really great checklist for upselling, and that's going to be available on our local high street website shortly. And so that's something to be thinking about that checklist that every member of your staff has, to be able to think about how, once the customer's in, how you can upsell them, how you can increase that basket price. So we recognize that this is an issue that is here, it's an issue that's here now, and it's an issue that you are going to have to deal with. So the next steps that you need to take are understanding what you're spending with and with who you're spending it. So make sure that you are really clear on that, and that you are aware of that. Going through your bank statement, understanding exactly where the money is going is a really important one. Remove all unnecessary spend. This is the time to cut the cloth and make sure that you are not spending on an unnecessary spend. And that probably also works as being a consumer as well. This is a time, an opportunity for you to tighten the belt and get rid of all of those excess costs. Have a plan in place of what you're going to negotiate and how and what sort of target that you get to, okay? So that you can estimate where your cost base is going to be, not just now, but also in the next year or so. We want to be thinking about where your cost base is going to be, because that's the point at which you're going to need to make sure that your pricing and the sales that you make add up to ensure that you are profitable and that you cover all of your costs and that you make a reasonable level of profit. But review your pricing to consider value-based deals which will attract consumers in the environment. That's a kind of key point with that. Also review your service and shop front. So this is the opportunity to make sure that your shop looks great. So if you thought that consumers were fussy beforehand, consumers are going to be really choosy with where they put their money now. So use this as an opportunity to make simple, low-cost changes to your shop. Make sure that your shop, coming into your shop, is really attractive for consumers, and make sure that it's really focused around those deals that are going to be value-based for the consumer, but are also going to give you profit. If you want any further information, then contact us on hello@smarter-society. What we'll do is that we can point you in the direction of any support services. We can also put you onto our mailing list, which you'll get details of things like that upselling checklist. But otherwise, thank you for listening to this webinar, and we will look forward to seeing you on our next webinar.